The next topic will be gross national product. Gross national product, also known as gross national income, is the total income earned by the resident of a country. It equals gross domestic product plus income earned by a country's residents abroad minus income earned by foreigners in a country. While GDP measures the income earned within geographical boundaries of a country, GNP calculates the income earned by a country's residents or nationals. Next one, net national product. Income generated by a country is achieved on the back of significant investment in infrastructure, that is roads, bridges, etc., which must be maintained. If we are interested in finding out the income generated net of such charges for periodic maintenance of such infrastructure, we calculate net national product NNP, which equals gross national product minus depreciation. National income or NI is most comprehensive measure of total income earned by residents of a country. It approximately equal to net national product NNP except for an adjustment for statistical discrepancy. The next one will be personal income. Personal income is the gross amount attributable to residents of a country. It is the sum of all incomes in the hand of individuals. Measures of aggregate income such as GDP, GNI, NNP, and NI are broad economy level measures of income and production which do not segregate transfer payments, taxes, etc. But if we are interested in finding out how much money ultimately accrues to people, we need to calculate personal income. Personal income equals national income minus indirect taxes such as sales tax, VAT minus corporate profit minus net interest plus income from assets such as dividend, interest payment, etc., plus transfer payment, that is amount paid by government to people with low incomes minus social security contribution made by people. The next one will be disposable income. Disposable income is the income that is at the disposal of residents of the country. That is, it is the income which they can consume or save. Disposable income equals personal income minus personal income tax. Now we are talking about function of national income accounting. Basic function of national income accounting are mainly two. First one, to identify specific economic achievements of a country, and second one, to provide an objective basis of evaluation and review of policies under implementation. The date so arrives at enables us to understand, analyze, and interpret the working of an economy. That is why the subject of macroeconomics should begin with a study of national income accounting. What are the use of national income accounting? First one, it indicates performance of the economy significantly, economic strength and failures. Second one, it helps to find out structural changes in economics. For instance, in India, proportion share of primary, that is agricultural sector in national income is declining, whereas those of secondary, that is industrial sector, and tertiary, that is services sector, are rising. Number three, it reflects how national income is shared among various factors of production. In this context, it is especially helpful to trade unions in making rational analysis of remuneration that the labor is getting. Fourth one, it helps in making comparison among nations in respect of national income and per capita income, which leads to make suitable changes in plans and approaches to achieve rapid economic development. Next one, national income statistical data reflect the specific contribution of individual sectors and their growth over time. Number six, it is helpful to UNO, which formulates welfare plan for different countries, especially for undeveloped and developing countries. And the last one, it has several uses for economic policy and research. So here I'm ending the topic for 2 days. If you have any query, please um, uh, query me at this session. Thank you.